American household debt is at an all-time high of $18 trillion. Debt grew by $93 billion at the end of 2024, and half of that increase came from new credit card debt.
Even the wealthy are sounding the alarm. Something terrifying is brewing in the American economy, and it's not just working families who are worried anymore. A top financial columnist has dropped a bombshell. We may be heading straight into an economic disaster. So if the rich are panicking, what does that mean for the rest of us? Are we on the edge of another recession or something far worse? Let's break down why even the elites are growing nervous and what could be coming next. As of March 31st, 2025, Robert Reich, former U.S. Labor Secretary and now a prominent economic columnist, issued a chilling warning. In his latest piece, Reich didn't hold back. He described the U.S. economy as teetering toward a frightful situation, pointing to troubling signals in consumer debt, corporate layoffs, and sky-high interest rates. But what makes this warning different? Because it's not just pessimism from the sidelines. This is concern coming from inside the financial system itself. Wealthy investors, corporate executives, and economic insiders are quietly preparing for turbulence, and in some cases, pulling their money out. So, what exactly is triggering this anxiety at the top? First, household debt in America has exploded. According to recent Federal Reserve data, U.S. credit card debt hit a record $1.13 trillion. Yes, trillion. That's not just a number. It's a flashing red warning sign. As interest rates remain high, more Americans are relying on credit to survive. But paying it off is becoming impossible. Reich calls it a debt trap, one that could collapse under its own weight if the economy slows even slightly. Second, corporate layoffs are quietly ramping up, even as Wall Street posts gains. Big tech, manufacturing, and logistics firms are trimming jobs, but avoiding headlines. That's no accident. Companies are restructuring in silence, worried that public panic could trigger a wider downturn. Third, the Federal Reserve's interest rate strategy is under fire. Critics say the Fed may have overcorrected in its fight against inflation. While inflation has cooled, it's now being replaced by stagnation, sluggish consumer spending, weak hiring, and uncertainty in global markets. And here's where things get even darker. Reich argues we may be heading toward a rich man's recession. Unlike the 2008 collapse, where working-class Americans bore the brunt, this time even the wealthy are exposed. With the stock market behaving erratically and real estate growth slowing, high-net-worth individuals are losing confidence in the system they helped build. So, what does this all mean? The picture Reich paints is not just about economics. It's about trust, or the slow erosion of it. When the rich stop believing the economy is stable, they move first. They pull investments, shift assets overseas, or hoard liquidity. That behavior isn't just protective, it's contagious. It creates a ripple effect that affects banks, markets, and yes, ordinary families. Meanwhile, policymakers in Washington appear paralyzed. With an election year looming, neither side wants to make bold moves. Democrats are pushing for social spending and stimulus. Republicans are demanding spending cuts. And in the middle, the American people are stuck watching prices rise while wages stall. Even worse, young Americans are losing faith. Millennials and Gen Z now carry more debt, less home ownership, and lower savings rates than previous generations at the same age. Many are asking, is the American dream officially dead? But there's a deeper issue beneath all this: inequality. Reich's warning isn't just about recession, it's about a system that's structurally unstable. When 1% of the population controls more wealth than the bottom 90% combined, economic tremors can quickly become earthquakes. In Reich's words, you don't need to be a socialist to recognize that such imbalance is unsustainable. And yet, Washington continues to kick the can down the road. Here's the truth. The warning signs are no longer theoretical. Consumer debt is real, corporate layoffs are real, and elite panic. That's now becoming real too. The question isn't if the next downturn is coming. The question is, how bad will it be, and who will be left holding the bag? Should the Fed reverse course before it's too late? Is this a time for government intervention or belt tightening? And most importantly, what happens when even the wealthy stop believing in the American economy? Let us know what you think in the comments. Subscribe for more breaking political and economic analysis, and stay ahead of the storm.
But we have Liberation Day, as you know, on April 2nd.
Trump has called Wednesday, April 2nd, Liberation Day. He calls it liberation from foreign goods in the U.S. market.
Those would be the 15 countries, the largest U.S. trading partners that account for about 80% of all U.S.
25%? No exception.
They want cars built in America with American parts.
Most likely prices are going to go up by a few $1,000s.
A massive financial shockwave is about to hit the global economy, and it's coming straight from Washington. On April 2nd, 2025, the U.S. will activate a sweeping set of tariffs under President Trump's so-called Liberation Day. Supporters call it economic justice. Critics? They're calling it a self-inflicted disaster. With stock markets swinging wildly and international leaders scrambling to respond, the world is bracing for a new era of economic conflict. But is this bold strategy a long overdue course correction or the start of a global meltdown? President Trump has declared that America is being exploited by unfair trade deals and foreign economic dominance. His answer? Massive tariffs set to launch on April 2nd, dubbed Liberation Day by his administration. The new measures will impose a 25% tariff on all auto imports and additional levies on goods from countries that maintain high tariffs on U.S. exports. The president's goal, according to statements from the White House, is to level the playing field and end what he calls one-sided trade slavery. But this aggressive stance comes at a precarious moment. As of March 31st, 2025, markets across the globe have started to panic. Economists warn that while tariffs may protect certain domestic industries, the cost could be a global recession. The first shockwave is already visible in the stock markets. In just a few hours of trading, the Dow Jones Industrial Average dropped 1.5%, the S&P 500 fell 1.2%, and tech-heavy Nasdaq tumbled 2%. Overseas markets didn't fare better. Japan's Nikkei plunged 4%, while South Korea's Kospi slid 3%. Investors aren't waiting to see how this unfolds. They're pulling out. And where are they putting their money instead? Gold. As of March 31st, gold soared to a record $3,122 per ounce, a clear sign that fear is driving financial decisions. The second major impact is hitting the auto industry hard. The 25% import tariff targets foreign-made cars, but the fallout could slam U.S. manufacturers too. General Motors stock has dropped 7.4%, and Ford is down nearly 4%, as both companies brace for higher supply chain costs and disrupted production lines. Ironically, even American-made vehicles rely on globally sourced parts. The third pressure point is inflation. With tariffs expected to raise the cost of cars, electronics, and everyday goods, the Federal Reserve is now trapped. Inflation has already surpassed its 2% target, and with consumer prices set to rise further, the Fed may be forced to raise interest rates into a slowing economy, creating the perfect recipe for stagflation. And then there's the political backlash. A new APNORC poll shows Trump's trade policy is deeply unpopular. While his immigration and border stances enjoy strong Republican support, nearly 60% of Americans disapprove of his handling of trade. Even some GOP lawmakers are privately worried about midterm fallout if prices spike. The White House insists this is a necessary reset, a long overdue correction to decades of economic imbalance. In Trump's words, other countries have been robbing us blind. That ends now. Supporters believe this will revitalize American industry, repatriate jobs, and restore national pride. They point to the short-term pain as a worthy price for long-term sovereignty. But critics see a darker picture: higher costs for consumers, trade retaliation from allies, and a crippling hit to already fragile global supply chains. Europe has already signaled potential counter tariffs, and China is rumored to be preparing restrictions on American tech and agriculture. Wall Street analysts warn that if a trade war spirals out of control, we could see another 2008-level economic shock, just with different villains. Meanwhile, small businesses, middle-class consumers, and low-income families could bear the brunt of the fallout, paying more for essentials while jobs hang in the balance. The countdown to Liberation Day has begun, and with it, the world braces for a potentially seismic shift in the global order. Will Trump's tariffs spark a patriotic economic revival, or ignite the flames of a global trade war that sends shockwaves through every household in America? We want to hear from you. Are these tariffs a bold step toward economic independence, or a reckless move that could backfire on millions of working Americans? Drop your thoughts in the comments below. And if you want more deep dives on the global power games shaping your world, hit that subscribe button and stay tuned for more.
President Donald Trump says he is not joking about serving a third term, even though the Constitution does not allow for this.
President Trump says he's considering ways to serve a third term. That is despite the 22nd Amendment of the Constitution.
To saying that he's seriously considering running for a third term.
President Trump said he is considering serving a third term despite the constitutional ban.
Is Donald Trump preparing for an illegal third term in the White House? Is the 22nd Amendment now just a suggestion in Trump's America? In a move that's both bold and chilling, Donald Trump has openly floated methods to return to power for a third term, something that was once considered unthinkable under U.S. law. As of March 30th, 2025, a CNN report revealed that Trump isn't just hinting anymore, he's planning, and the implications could shake the foundations of American democracy. The U.S. Constitution is crystal clear. The 22nd Amendment states that no person shall be elected president more than twice. It was enacted in 1951, after Franklin D. Roosevelt served 4 terms, to ensure that no president could ever again consolidate power indefinitely. For decades, this amendment stood as a safeguard of democratic stability. Until now, Trump, who already served from 2017 to 2021 and is now the Republican frontrunner for the 2024 election, appears to be laying the groundwork for something no president has done in modern history: break the two-term tradition by exploiting legal gray zones. Trump first raised eyebrows earlier this month when he told reporters he's not joking about seeking a third term. He's floated several tactics to make it happen, some audacious, others downright dangerous, one such tactic using a loyalist as a placeholder. According to the March 30th CNN report, Trump allies have discussed a strategy where a future vice president, potentially someone like J.D. Vance, would win the presidency, then resign, allowing Trump to be reappointed under the Presidential Succession Act. It's a legal Hail Mary, but one that his inner circle is reportedly discussing seriously. Another strategy is already underway in Congress. On January 19, 2025, Republican Representative Paul Gosar introduced a joint resolution to repeal the 22nd Amendment entirely. If passed, it would legally clear the path for Trump to serve beyond 2 terms. While such a move would require approval from 2/3 of Congress and 3/4 of the states, a near impossible threshold, its mere existence signals a calculated attempt to normalize the idea. The most alarming part? Trump's base loves it. At rallies and town halls, chants of 3 more terms are no longer ironic. His supporters claim that the 2020 election was stolen and that Trump never got his real second term. For them, a third term is not just acceptable, it's justice. But critics warn that this rhetoric is pulling America toward authoritarianism. Legal experts say the suggested succession plan would trigger a constitutional crisis, challenging both the letter and the spirit of the 22nd Amendment. Former federal prosecutor Renato Mariotti called the idea constitutionally dubious and dangerously destabilizing. Let's be clear, Trump has not officially declared his intent to violate the Constitution, but the seeds are being planted. By normalizing third-term talk and exploring fringe legal theories, Trump is testing the limits of what's politically and legally acceptable. This isn't just about Trump, it's about precedent. If he succeeds or even seriously attempts a third term, future presidents may be tempted to rewrite the rules too. That's how democracies crumble, not overnight, but gradually, through loopholes and normalized power grabs. And if Trump's third-term push fails, it still does damage. It shifts the Overton window, conditioning the public to accept more and more extreme interpretations of executive power. It weakens the Constitution by turning it into a political football. Even globally, the implications are dire. America has long positioned itself as the world's model of constitutional democracy. If Trump pursues a third term, whether by manipulation or amendment, it could embolden strongmen abroad and erode America's moral authority on the international stage. At home, the consequences could be even more divisive. Millions of Americans already believe the 2020 election was illegitimate. Add a messy legal battle over term limits, and the nation could plunge into yet another constitutional showdown, this time over how long a president can stay in power. So here's the question: is America sleepwalking into a constitutional crisis? Trump's third-term talk isn't just a political stunt. It's a test of how far he can push a system already straining under division, distrust, and disinformation. Whether you support him or fear him, one thing is clear. This battle isn't about one man. It's about the future of American democracy. Do you think Trump will succeed in changing the rules, or will the Constitution hold the line? Let us know your thoughts in the comments. And don't forget to like, subscribe, and hit the bell for more deep dives into the biggest political stories shaping our world.
With the economy and Goldman Sachs raising the probability of a U.S. recession to 35%.
The chance of a recession is quickly rising, according to one of America's biggest banks. Goldman Sachs says the probability of a U.S. recession in the next 12 months is now at 35%.
A stunning shift just rocked Wall Street, and it's coming from the top. Goldman Sachs, the financial titan known for its measured tone, has now issued a chilling update. The odds of a U.S. recession have surged, and the clock may already be ticking. Could America be sleepwalking into a downturn while Washington stays frozen in political gridlock? As of March 30th, 2025, Goldman Sachs raised its projected probability of a U.S. recession in the next 12 months to 35%, a dramatic jump from its earlier estimate of 20%. This isn't a fringe opinion. When a heavyweight like Goldman pivots, markets listen. And the timing of this update is no coincidence. The firm's economists point to a confluence of pressures: tightening credit conditions, weakened consumer spending, declining manufacturing output, and rising geopolitical tensions. Most critically, the recent wave of Federal Reserve rate hikes, intended to tame inflation, may have gone too far, now threatening to choke off economic growth entirely. So, what does this all mean for Americans? Is the worst still ahead? Or is this just Wall Street hedging its bets? Goldman's revised outlook follows a broader wave of pessimism rippling through the financial world. Just last week, the Conference Board's leading economic index posted its 22nd straight monthly decline, a streak not seen since the Great Recession. It's a clear warning sign that key sectors are flashing red. Second, credit availability is shrinking. Regional banks are tightening their lending standards, making it harder for small businesses and consumers to access capital. This is especially alarming for an economy still heavily dependent on consumer demand. According to Goldman, these credit constraints are no longer theoretical risks. They're already translating into slower investment and weaker job creation. Third, there's the Fed dilemma. With inflation still hovering above the 3% mark, the Federal Reserve is walking a tightrope. Cut rates too early, and inflation may roar back. Stay too aggressive, and we risk sending the economy into a tailspin. Goldman Sachs is now warning that the Fed's current posture may be underestimating the lagging effects of monetary tightening. And then, there's the political wildcard. With the 2024 election still casting long shadows over policymaking in D.C., efforts to pass meaningful fiscal support, whether through stimulus, infrastructure, or tax reform, have stalled. In a climate like this, even a modest economic shock could spiral into a full-blown recession. Supporters of Goldman's revised forecast argue this is simply realism catching up with data. The economy, they say, has been flashing warning signs for months, and optimism about a soft landing was always overly ambitious. They point to falling consumer sentiment, slowing wage growth, and a cooling housing market as undeniable proof that momentum is fading fast. But critics see something else, a self-fulfilling prophecy. If institutions like Goldman issue dire warnings, it can spook investors, freeze hiring, and pull back spending, thereby creating the very recession they fear. Some economists believe the fundamentals still support modest growth, especially if the Fed pivots toward easing by mid-2025. The bigger concern? The average American may be left holding the bag either way. Whether or not a technical recession occurs, the signs of economic pain are already visible: rising defaults on credit cards, shrinking savings, and surging rent prices. And let's not forget the global picture. With China's post-pandemic recovery sputtering and Europe battling its own inflation demons, the U.S. has fewer cushions to fall back on. A U.S. recession would send ripple effects far beyond Wall Street, shaking everything from oil prices to tech valuations and even national security budgets. Goldman Sachs' new warning isn't just a number, it's a signal that the era of cheap money, easy growth, and endless bailouts may be ending. And as the odds of recession rise, The stakes for everyday Americans grow higher by the day. So what happens next? Will the Fed reverse course in time to avoid disaster? Can Washington find the will to act before it's too late? Or are we already headed for a storm that no one can stop? Let us know what you think. Is this just financial fear-mongering or the start of something real? Drop your thoughts in the comments below, and don't forget to subscribe for more breaking economic insights.